Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities. Opinions and statements of guests not affiliated with EverAg are their own and do not reflect the views of EverAg. The accuracy of their statements cannot be guaranteed by EverAg.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage your risk. I'm your host, Jim Matthews, reporting from Chicago on Thursday morning. Joining me today, as always, from Kansas, Director of Feed Procurement, Mr. Jake Kingsley, making her first appearance on the Grain Feed, industry legend, global ag columnist with Reuters News, Miss Karen Braun. Team, how are we today?
Very well this morning.
Excellent. Karen, how are you?
As good as I can be for, such a busy week with the markets and having these reports ahead of us. A lot to look at this week.
There's a lot going on this week. Jake, what about you?
It's been a busy week. Some of us had to stay in the trenches while everybody else was on vacation, so been working pretty hard. A little bit of double time, they might say.
Yeah, well, I'm not sure who you're referring to, but it sounds like you've had a tough go, but you've done a great job holding down the fort. Very well done. It's been a big stretch here right over this month of June. Lots been happening in the grain markets, but the fun part about June is that it's always going to end with this double whammy, this stocks and acreage report. So we've got a lot to talk about today because when this show is published, by the time folks are watching, those numbers will most likely have come out. So those reports are Friday, June 28th. They come out at 11 o'clock Chicago time. So we're recording this Thursday morning. So perhaps Paige, if you'd kindly timestamp the broadcast, it is Thursday morning. It's getting close to 10:30 Chicago time. Markets are a little choppy. They've been, let's say, fairly red, especially on the corn side of things over the past several sessions and more. But some things have stabled out a little bit for the time being. And perhaps we've got managed money at least trying to stabilize or reposition ahead of these big reports tomorrow. So we've got corn futures at the moment are roughly unchanged. We have D's corn trading, let's say, 436 at the moment on December futures. We have Nov beans about 1107. That's also just about unchanged. So again, things are kind of steadying out as we get ahead of this thing, being 24 hours ahead. And then that soybean meal, that stubborn little byproduct, is trying to hold 340 for now for December futures. So we had 350 was kind of that tough threshold for Dees, but that protein has managed to at least break through. We haven't come not quite down to that 330, 335 area we're hoping for just yet. We got close, but we're holding about 340 for the time being. So perhaps these reports tomorrow maybe kind of help dictate just how low we can go in the near-term future, or perhaps this thing kind of stabilizes and finds some support as we push then into the 4th of July trading choppiness of that Thursday being offline, then back on that Friday, and giving the funds an opportunity to kind of settle in and say, all right, how's this thing actually look as we push forward through the key development stages of the summer? So luckily, we have grain guru Karen Braun on the show with us. Karen, there's so much happening in the markets lately. What's been your take as of late?
I think that the weakness in prices definitely stands out. I mean, we typically see prices kind of peak in the summer season at some point as we get, a better handle on the U.S. crops. And then once we decide that they're fine, kind of sell off and, settle into a lower price, but kind of doing this a little bit earlier than normal. And I kind of think that that's been one of the biggest themes that we've seen recently here. I mean, corn and soybeans both. And that's setting up interestingly for the Friday report because, that data, the stocks and the US planted acreage can be very surprising. And the trade often misses those numbers. And, no matter how much research you do, USDA can come in and say, nope, it was something totally different. And now we got to rework our balance sheets. So yeah, a lot of price volatility can happen on Friday. And it's actually the most volatile USDA report day of the 15 that we see per year. I think that's because of the acreage data, of course, but also we're in a US weather market. And this is a really, really critical time right before the July 4th break. If you see favorable weather heading into July, sort of the end of June, whatever that report says, especially if it's bearish. The market can run right over that and just sell off if we're seeing any kind of favorable weather into July. So that's a really big factor too. People should still be looking out for the weather forecast, seeing if there's any changes on Friday and especially early next week. I think the July 4th holiday is Thursday, right? So that's always a very critical week to watch too with the weather.
Yeah, it's really interesting. And you noted it's the same that Jake and I have been discussing with our clients now over the past month or so. Is we talk about that seasonality, probably way too much, right, Jake? Like I'm always emphasizing like, hey, it's not a guarantee, but this is the seasonal trend of the marketplace. You often see support as we trek through the spring. Planting likes to give us a lot of volatility, which it did this year because of the delays that we've had. And then there's also been tons of extra rain and flooding now over on the Western Corn Belt over the last week or so. We've seen all the pictures, right, of folks sharing with us internally, but also online, fields looking underwater. So the weather this spring has been, a huge variable for us. And as we push into that peak, I think what we've been telling folks is usually seasonally, like you said, Karen, it often comes like either right at or after that 4th of July stretch. But this sell-off has made me think for a moment or two of hold on a second. The highs are in potentially. We've already slammed this thing a little bit earlier than normal. But what if tomorrow is a surprise bullish report, right? I don't think that Jake and I necessarily think that. But as you noted, Karen, I mean, this is usually the most volatile report we've got because there are some huge swings and misses when it comes to those acreage numbers. And I think, right, Karen, even last year was a huge miss, right? It was almost 4 million acres.
Yeah, for soybeans.
Yeah. I mean, and I think we had 2 million the other way. I mean, it was a big one.
Yeah. So if you look at just the last 5 years on this same report, the soybean acres have landed outside of the range of analyst guesses for the last 5 years. And for corn, it's 3 of the last 5 years. So obviously, even though we've already pretty much planted the crop, there's still a lot of variables that analysts don't pick up on, and anything can happen here. But I do think that based on the analyst guesses that are out, it's showing a little bit of a gain of acreage for corn, soybeans, wheat, and all the other, cotton, small grains. And that's pretty logical. I mean, that's a safe bet because more often than not, we kind of see the acreage estimates rise from the March survey to the June survey because in many cases, planting is still underway in early June. And so, farmers are optimistic they're going to get the crop in, but then whatever happens in June and whenever they decide to stop planting, that tends to show up in the final estimates. And usually the June estimates, especially for corn, are too aggressive. So you normally see a little bit of a decline into the finals. So you can just generally assume that the June estimate is the highest that we'll see in terms of corn and soybean acreage. But yeah, like you said, last year for soybeans, huge miss. Acres came in 4 million below the trade guess, down 4 million from March. I mean, that's pretty crazy. And last year we didn't really have planting issues. Yeah, I think anything can happen in these reports. And again, if there's not a surprise, then really the weather forecast is going to take control. But one thing I want to point out, and so I did a little bit of modeling, like regression modeling. Yesterday, I was just looking at some stuff and I was trying to see the price reaction on June report day, looking at both corn and soybeans. And I was trying to see what variable the trade miss on corn acres, the trade miss on corn stocks, or the recent trend in corn prices. Like, what is the thing that impacts that price reaction on report day the most? Or also the fund positioning. That was the fourth variable I looked at. Corn acres by far was the biggest influence. And that actually goes for soybean prices and corn prices. It's that corn acreage number that is the biggest factor when it comes to that price reaction. So, people like to look at all of the numbers, but if you only had 1 second to look at a number, corn acres would be the one that you should look at. So I think that on Friday, we will be able to rework the balance sheets, kind of see what we're working with, and then really focus on yield, which July is going to be a really big month for.
Yeah. And I think last year's corn acreage number ended up being, like 94 million acres or so. And to your point, Karen, I mean, yields weren't super impressive on last year's crop ultimately, but you put a somewhat average yield on 94 million acres. And guess what? We have record production in the United States. So, that March guess of 90 million, one could think, even if you just stayed right there at 90, and had average yields on top of a record crop the year before,
Right.
feels like there's going to be plenty of corn.
And I think what's interesting about the corn acres is that in March, you had the corn acres coming in at 90 million. This March was right at the bottom of trade guesses. And I know a lot of people at that time said, oh, well, USDA will definitely find a lot more corn acres in June. And then here the trade estimates come out and they're pretty conservative, just a little increase expected. The high end, not too high, only 91.3 million. So that's kind of conservative. And I think, while there were planting delays, maybe for a week or two, maybe nationally, you got the crop planted. Like we were not anywhere close to the delays we saw in 2022, and then especially 2019, that was a big year. So I just found that interesting that analysts kind of backpedaled on that big corn acreage claim back in March. So maybe that is a place where you could see a surprise.
Yeah. And I think the managed money, especially over the last week or so now, has really extended that net short position too. I mean, to have taken December corn now straight down into the 430s after so stubbornly holding 460 support for months. I mean, 3 or 4 months every time we came down and it's something right around 460 on those D's futures, we found life again. And we kept trying to be patient with folks on our side, right, Jake? I mean, we're saying like, let's give this a chance to break through before we put some of those new crop hedges on, for those of buying feed and protecting that feed purchasing risk. And that move was pretty swift from breaking just under 460 to straight down to 435, 440. That's a big one. So the managed money position is much different than it was a year ago. So potentially then if it is a lower than expected than we're all thinking, it gives them a little bit of ammo. And then, like you said, Karen, from here on out, though, we're still watching weather. Without any huge weather scares, it's going to be tough to feed those bulls. If everything looks okay, it's kind of hard to justify a huge run up going forward.
Yeah, I mean, I think actually the managed money positioning right now is the biggest savior against a potential sell-off on Friday, should we see bearish numbers. You very rarely see funds heading into the end of June reports with bearish positions. So anytime that happens, we usually close higher on this report day in corn. The only time we didn't was in 2018 for soybeans, and that was obviously during the trade war. I posted about this on Twitter, I think on Wednesday, but I was talking about how we actually have some parallels to 2018 because for soybeans, I mean, we've fallen in the last month, I don't know, maybe around 8%, November soybean futures. And that's the biggest decline, from late May to late June and since 2018, second biggest in more than 20 years. So, we do have that and we have the funds that have been selling since late May. And so funds don't normally sell off beans kind of into early June because there's a lot that can happen with the crop. And the only time that really happened to this, similar degree was in 2018. So, obviously we don't have the active trade war going right now. That's not really a main feature of our market, but I think that could be kind of insulation against any potential further sell-offs or anything super extreme because, you could see bearish data, but funds are already short, and they know that something can still happen. And, we talked about that weather forecast. So, we've had problems with the flooding and overly wet weather in the West. And we've seen it a little bit too dry in the East. And kind of looking at the weather forecast going forward, it kind of looks like maybe much of the same is in store. I mean, I don't really see a huge flip in the forecast. Don't see really any threatening heat into the first, week or two of July. And, that's always good. There's a chance that, some of that Western belt wetness could stick around in the next week or so. And the East will be a little bit, drier, maybe a little drier than normal. So I don't see any huge flip. In the past, couple days, I haven't seen big shift in the weather forecast. So that's another really big thing at this point, especially headed into the June, stocks and acres report. And then in the following week with the July 4th break, that's the biggest thing to watch. Like, has the weather forecast changed, from what we've been seeing in the past several days? And right now, I'm not seeing a huge flip in the forecast. So the forecast isn't, I wouldn't say threatening per se. I wouldn't say, it's amazing either. I mean, rain makes grain. Obviously, that's the catchphrase. But we also do have too much rain, obviously, in some parts of the Western belt. And then really in the North, like in North Dakota, they have been really cool. And the crops there, like the corn and soybeans, are just not growing. They are not getting the heat units that they need. So, and I don't really see any major heat coming that way. So, I'm not talking about a crop disaster here, but USDA wants a 181 on the corn yield. So that's not a really great path to 181 if you have little nicks here and there. So you may have to trim that yield expectation just a little bit, but I still think that something, pretty high, similar to last year's, record could be on the table. It's still early.
Still early, yeah. Well, thank you very much for that, Karen. I mean, Jake, in terms of, what you've been seeing on this, to Karen's point, it's a bit early yet. The forecasts aren't perfect, but especially following some of the weather adversity that we've had, but they're also pretty okay. And I think, Jake, you talk a lot about, I mean, trend line yield, it's a nice thing to shoot for, but do we hit it? No, right? We don't. But do we need to hit it? Also, probably not. So, I mean, Jake, in terms of what you're seeing on the physical side of things with this swift and or steady break, depending on the market in futures, what have you been seeing on the physical feed side of things?
Yeah, on the physical side and basis numbers, we really haven't seen any tremendous change week over week. We're seeing some spots, particularly in the Midwest, where new crop basis offers are meeting our goals. That was the case last week, and I think there's more of those popping up now. I think old crop is still a little bit difficult to source in some pockets as folks are having to just bid up a little bit on basis to get that stuff moving. I think that's largely reflecting this breakdown in futures, and farmers just not really interested in turning loose of what they've been holding on to as prices continue to decline. We're seeing some opportunities in corn there. Certainly, protein continues to be very chaotic with the demand for Canadian canola and the continued concern about logistics on their rail lines up there. And then you've got all of these extended shutdown periods for maintenance at these crush plants across the US. And the supply in the short term is tight. We all are talking about how healthy the balance sheet is overall. So kind of weathering that storm and still being patient on new crop protein basis pretty well across the country. We're still probably $15, $20 a ton above where we want to be in a lot of places. And so with this futures meltdown that we've had over the last handful of trading sessions, we've been stepping in. Like you said, we don't have perfect conditions. There are a lot of ways for these balance sheets to change over the next couple of weeks and several months. Get into some more weather issues here in the US, or you have some sort of a rocky start to the South American crop later this fall. And you can certainly turn this thing back the other direction. I don't think we're by any means what we would call bullish and expecting $5 corn or $400 soybean meal to return overnight. But we can do what I would refer to as some bargain hedging here. We're able to get some of the lowest ceilings on both corn and soybean meal futures that we've seen in a couple of years for 70, 80% of the cost of what it would have taken to do similar coverage last year at much higher strike prices. So it's just a great opportunity to step in and get the first layer covered up, ensure some portion of your feed has a very limited upside potential. And we're doing these things with very flexible strategies that allow plenty of downside opportunity, wide open to the downside in protein, and you can stay wide open to the downside in corn. And we're talking about doing stuff for $5, $6, $7 a ton on corn and $10 a ton on soybean meal. It's been a pretty busy week in that sense, but folks are taking advantage of it, especially with milk prices up where they are. They're able to pencil out a little bit of a profit very early. So it's kind of what we've been working on ahead of this report, just in case things do get a little bit crazy.
That's what we're in the business of doing, right, Jake? Is we're trying to protect people, to the upside on some of these prices. And I think we've held our sentiments fairly unchanged. I think, at this stage, maybe the only thing in our minds bullish about the market is just how bearish it's been. And Karen noted the managed money positions. I mean, we've just pushed this thing so aggressively lower so early, at least earlier than average, let's say, that maybe that's the one component, is that even if we're just slightly below expectations and you get a slightly hotter and drier forecast, maybe managed money says, I'm feeling a little exposed here. Maybe I should cover myself a little bit. Again, does it justify a huge run up? Not necessarily, but it's just good to have some of that insurance on, owning some of those calls, cheap call spreads, whatever that looks like, protect yourself to the upside. So I think that's the name of the game, at least at this stage, and then see what this report tomorrow, Friday, gives us. And who knows, it can get a little wacky. I think we're going to end the month of June tomorrow. In terms of trading days, we're going to end the quarter, the first half of the calendar year, which is like mind-blowing at this stage. And then when we come back into it Monday, it's new trading month, new trading week, new trading quarter, right? I mean, it's just to lead into another choppy week of 4th of July off. There's just a lot going on here at the moment. So you could see why managed money would maybe want to kind of reposition a little bit and or just maybe reduce their exposure at this stage. So it'll be really interesting to see. Jake, do you want to just take a stab at a bold prediction? I think we had some numbers from you a couple, let's say, months ago, but now that we're a day before, you want to throw a bold prediction on a corn number tomorrow, corn acreage?
What did I say last time? Like 90 and a half or something like that?
Yeah.
I could see this thing scraping up and getting just a little over 91 altogether now.
Ooh. Karen, how do we feel about that 91 number that Jake's throwing out?
Yeah, I could see it either way. I mean, every time I try to pick a number, I find reasons why that number's wrong. And I just try to stick with putting out the analysis, giving everyone my very best research, and letting you guys decide.
Yeah, you know what? That's a professional answer right there. That's a professional answer. Jake, you know what? I feel good about your 91. I feel good about it. I might go a little bit higher. I might go 91 and a half. Bold prediction. What about beans, Jake?
Beans, they're probably going to stay steady. These guys like to grow corn. I don't know how much they love growing beans.
These guys like growing corn. Amen,
Guys
brother.
and gals.
They really do. They really do. So you think beans are steady? I think the bean number was like 86 and a half. We're going to go right around there.
I think so.
Okay. I'm going to just take her down a notch. I'm going to go down to 85. I'm going to go 91 and a half and 85. That's where I'm going. That's my bold prediction. Karen?
So going down on beans would be the choice that I'd make if I had to, just because we have not seen June soybean acres come in above the average trade guess in 10 years.
Oh.
That's a very, very prominent streak.
Wow.
Like, you don't see that with, these reports very often.
Yeah.
I mean, 10 years is a huge streak. So if I had to place a bet, I would stay with status quo, but we've obviously seen a lot of stuff in 2024. Trends are meant to be broken. So
That's right.
Once again, which side do you want to bet on?
I like it. Okay, so I'm feeling a little bit better about that bean number. Maybe not as bold as I thought it was when I say it, but I'm feeling a little bit better after that. So thank you for that. And both of you guys, excellent work today. A huge thanks to Karen Braun for joining the show. Karen, it was great to have you today. Thanks for being here.
Yeah, thanks for having me. And this was really fun.
Awesome. Of course, we'd also like to thank the Everag Insights crew for their support. Thank you to Paige for her production magic. And thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We will see you next time on the Grain Feed.